Good day, everyone. Thank you for tuning to our webinar. We are Veye Pty Ltd. My name is Varun Ratra, and today we are going to talk about how 2022 has been overall, and which companies, especially small cap, which companies have performed well. And we will also talk about five high conviction companies for 2023. And before we proceed, I want to remind everyone that any advice we give is general in nature without keeping in account your personal financial needs. And kindly do your due diligence before you pick any stock because the stock market is subject to risk. And secondly, don't interpret our recommendations as a direct buy or sell. Okay, so let's begin. Those who don't know who we are and what we do, let me tell everyone that we are a leading independent stock market research company. Our headquarter is based out of Kent Street, Sydney, and we give buy, sell, and hold recommendations on Australian and US listed companies. Right. Okay. I would like to introduce my colleague Ravish. He's been a part of other webinars in the past. So Ravish is there with us. Hi, Ravish. How are you?
I'm absolutely great, Varun. And once again, we have come up with something new for our listeners, and I'm pretty sure that this information that we give it to them would be beneficial for them. So let's carry on.
Yeah, great. Okay, so yeah, let's talk about the markets overall. This year, obviously, it has been a roller coaster ride since beginning. January 2022, markets peaked out, and then obviously we saw a correction, markets all around the globe because of the high inflation, and Fed started uh, raising interest rates. And not only Fed, I mean, interest rates went up all across the world. Even RBA raised interest rates here as well, and the process has not stopped yet. We will see more interest rate hikes down the line. But the good thing to see is, we have seen a bit of ease out in inflation prices overall. So that is the kind of relief to the markets, and we have seen a good recovery in the markets. I mean, especially small cap companies. Quite a few companies had done a great job, in last few months. And let's talk about a few winners which are there for us. We managed to pick these companies at a good price, and they have done really well. So, our first winner that we have is a very interesting company. We picked this company at a very good price, and they're called Coronado Global Resources. The code is CRN, which is Charlie Romeo November. And we picked the stock at a price of $1.24. That was on 29th of December 2021. Currently, they are trading at around $1.95. Coronado is into metallurgical coal, and the demand of coal, metallurgical coal especially, has risen significantly, and therefore the company's revenue has skyrocketed. I think from our last report, we did mention that somewhere from $800 million, it has jumped to $1.7 billion. Don't vouch me on these figures. They may be up and down slightly from here, but overall, Coronado has done well. The best part with Coronado is they pay you a really good dividend, which is around I think 14, maybe around 15%. And dividend is not fully franked, but still, I mean, 14% is not a bad dividend yield. So yeah, Coronado has done really well for us. Another stock that has done really well that we picked at a very good price, that was Dundas Minerals. The code is DUN, which is Delta Uniform November. We managed to pick the company on 1st of September, and it tripled in just a little over a month. It gave a return of almost 200%. So yeah, very strong company. The best part, I mean, obviously, these are high conviction stocks. Therefore, the nature of these stocks is pretty volatile. One needs to be careful. And the third company, that we picked in small cap space, that was I College Limited, another strong company, and and company was recommended on 29th of June from our end at a consolidated price of 65 cents. And it gave excellent returns of more than 86% in less than 6 months. Yeah, having said that, we do have losers as well. I wish we had a crystal ball, but obviously we don't have that. So yes, there are losers, and yes, and this is how the stock market works. But our winners have overshadowed our losers because quite a few companies have done well. All right, now the question is, will 2023 be a better year for investors? Well, that's a very interesting question. Mainly for retail investors, because retail investors sheltering from market volatility should start planning a return to recovery themes. Digitalization and energy security are expected to drive investor returns over the next decade as complex geopolitical and economic headwinds continue to shape the investment landscape in 2023. However, the investment landscape should become more constructive as 2023 evolves, with the investors starting to anticipate interest rate cuts and higher growth. All right, so let's begin with the stocks which we believe that these companies have got potential to perform in 2023 as we enter 2023 pretty soon. So I'm sure that a lot of people, may be looking around to buy these small caps, and hence, we are presenting these companies to you, and you can always do your own study on these stocks and see if you see any potential in these companies. So first company, a very interesting one. We have been covering this company from last 7 or 6 months, and 6 or 7 months, and we still believe that this company is a very strong company. They're called High Purity Alumina, which is called Alpha HPA Limited. The code is A for Apple, number 4, N for November. A very strong company to look at. We think this company has got a potential. And what their nature of business is, they are into high purity alumina. High purity alumina is used in lithium-ion batteries. Not only in batteries, it is also used to manufacture LED battery lights LED lights as well. So now A4N is at a very interesting stage. They are advancing the commercialization of its proprietary solvent extraction and refining technology to produce a range of high purity aluminum products for sale into the lithium-ion batteries and LED battery markets. The company received the necessary approvals for the completion of mechanical work and heading toward the commencement of the stage 1 PPF. Alpha also received a grant from the government, and the second grant is in process based on the completion of the steps of stage 2. So these grants will help the company to accelerate the construction work and marketing of its products. So the company has started getting orders and received one empty order of HPA, and the successful delivery will enhance the chance to get larger order from the same and other prospective customers. So after the commencement of commercial production of stage 1, progress of stage 2 and approval of 45 million grants will open up a world of opportunities for the company. So I guess A4N has risen from, there was a point when they were sitting at 45 cents, and they spent they spent a good amount of time around that price, but they have started moving up, which is a good thing. And we believe that this stock, has got a potential to move further up. I think they're trading at around 68 cents right now. Hence, we believe that it's a decent price to look at the stock. Again, anyone looking for this company, we are keeping a medium to long term view, and we think this company, has got a potential to perform. Okay, so Ravish, would you like to highlight the second company we've got on the list?
Yeah, thanks, Varun. Yes, I would like to highlight the second one on the list, So we've been eyeing renewable energy companies, for a long time. We've been eyeing few companies. So this one we were going to talk about is Frontier Energy Limited. I'll give the ASX code is FHE. And Frontier Energy is basically into green hydrogen. So if I talk about green hydrogen is a clean energy source. And the best thing about it is that basically they emit only water vapor. So they leave no residences in the air, unlike coal and oil. So hydrogen has been a very strong, contender in the renewable energy sector altogether. Now, this gas is used in fuels, in cars, airships, and spaceships. And they've got a project which is Bristol Springs Green Hydrogen Project. And they've got all the necessary approval from the government as well. In fact, they've got a lead agency status by the Western Australian government as well. And Frontier has increased their production capacity. So they've increased its renewable energy potential from about 114 megawatt to more than 700 megawatt, which is a tremendous rise. And we reckon that Frontier, could perform extremely well. That is the reason, we had picked them up back in August, I think, somewhere around 30 odd cents. And within a span of about 3-4 months time, we have seen the company has grown by approximately 55-56%. So we are expecting, Frontier, to do well. And that is the reason, we have obviously given them a buy. So Frontier has been a tremendous pick for us. So far, so good. And we are just watching it very carefully as, what could be the future of Frontier going forward. So that's about FHE into green hydrogen.
Brilliant, Ravish. Thank you, man. You presented some interesting facts about this company. So I hope that gives clarity to our listeners about this stock. And you can always look at the stock, and you can always do your due diligence. And moving on to the third company, third company, obviously, we think it's a very strong company. And we have covered this stock on multiple occasions in the past. They're called Acro Formwork and Construction Services Limited, and the ticker is ACF. A for Alpha, C for Charlie, F for France. So Acro Formwork and Construction Services Limited, they are an Australian-based company engaged in the formwork and scaffolding and screen systems, as well as maintaining in-house engineering, safety, and project management professionals. So ACF is one of the few companies that is registering more than 50% compound annual growth rate in revenue. During the first 3 months of the current financial year, the company reported strong growth of 32% in contracts in the previous corresponding period. ACF maintained a solid strength in the civil construction formwork markets across Queensland, New South Wales, Victoria, and Western Australia. So Acro currently operates in 10 locations across Australia and owns over 60,000 tons of formwork and scaffolding products. The company has identified multiple near-term growth opportunities to enhance its performance. And apart from this, Acro Formwork and Construction Services are experiencing very strong activity levels across the large majority of its business units. So good company. We obviously picked the stock back in November last month at a price of 53.5 cents. And stock has risen since then. They are sitting at 62 cents. Again, anyone keeping a medium to long-term view can look at the stock, and they're trading at 62 right now. And they have delivered a 33% return in last 12 trailing months. And hence, we think this company has got more upside potential. And the interesting point about Acro is they pay you a dividend as well. And they started paying dividends since 2018. Dividends are around 4.3% at the current price. Some of the dividends paid in the past were fully franked, but from last two times, dividends were not fully franked. And good company to look at. We think this company has got a potential. Over to you, Ravish.
Thank you very much for highlighting that company. And now, switching to a biotechnology company on the list. Now, we really like biopharmaceutical companies, which could basically be in the drug development. And that is the reason, we have picked up Clinovell Pharmaceuticals as one of the contenders in 2023, which could do very well going forward. Now, Clinovell has got two special products. One of the product that they have is basically Senescy. And Senescy is a photoprotein product which they have applied over the skin, which prevents the skin from extreme skin disorders, right? Even the life-threatening disorders. And they've been selling Senescy, and they've got this patent for the Senescy product as well. And the second product, which is pretty good for Clinovell, is Prenumbra. So Prenumbra, which is basically used to prevent the strokes, and stroke is the second, common factor for death overall. And we have been obviously trying to develop a medicine to prevent the extreme from skin strokes. So if I talk about Prenumbra, so Prenumbra is the patented product for Clinovell Pharmaceuticals. We had given them a buy, I think, back in August 2022, when they were trading at a price of around $20.27. And if we look at the growth of Clinovell, yes, the markets have been a bit up and down, and that has restricted the growth somewhere down the line. But still, the stock price has gone up to $21.49. And we reckon if Clinovell can be focusing on the disorders and treating these, critical disorder diseases, and probably the stock price could rise up and go well past, 34, 35 as well in the next 12 to 18 months timeline. So we are pretty positive about, the company. And as I was telling you about the stroke being the second, common reason for death, the main reason for acute ischemic stroke is a severe blockage. And that is where their product, which is Prenumbra, comes into play. So Clinovell, is a really good contender, but basically not for a short-term timeline. We expect Clinovell to do maybe in the next 12 to 18 months timeline. So this is definitely for a longer horizon, Varun. And we reckon that this biopharmaceutical company can be a pretty good one addition in 2023 for our listeners.
Great, man. Great. And now let's talk about the last company that we've got on the list. So Ravish, please highlight that company as well.
Oh, absolutely. So the last one, which is the fifth one that we've got on the list for 2023, is a very strong company again. And this is coming from mineral sand exploration, and this is called Strandline Resources. I'll help you with the ticker. This is STA on ASX. And Strandline is into mineral exploration in two regions. So one of the reasons that they do mineral exploration is basically in Australia, Western Australia. And that is a Coburn mineral sand project in Western Australia. Now, if I talk about Coburn as a region, Coburn is one of the largest and most capital efficient mineral sand, where two rich deposits, zircon and titanium, are abundance in nature. So zircon and titanium, they produce low cost mineral sands. And the second area wherein Strandline is focusing exploration is basically Tanzania. So these two are the reasons where Strandline has been focusing. And zircon, if I talk about, has become one of the important industrials, heavy minerals. And that is primarily based on the thermal stability which they've got. They've got a high corrosion resistance as well. So most of the zircon is used and consumed by the ceramic industry. So if I talk about sanitary wares, whether these are tiles or dinnerwares or bricks or industrial tiles, this is where zircon is used. So that is what Strandline has been focusing on. They have already partnered, with few companies as well, and they are focusing to increase their production. And we reckon Strandline could prove to be an extremely good opportunity if someone is looking for capital gain. We had given a buy onto Strandline, and that was a recent pick, when we had covered a Strandline for a buy, and it was covered under a special report onto our website for our subscribers. So we had given a buy onto them at a price of around 45 cents in the beginning of December, so not a long time ago. And as I can see currently, they are 41. And so even though they have taken a bit of a dip here, but on a longer term horizon, the charts looks pretty favorable for the company, and we have pretty high hopes from Strandline going forward. So this pick, could be again, if someone is looking for mineral sand exploration and looking for something in zircon, then Strandline could be a very good bet, Varun.
Great. Thanks, Ravish, man. Amazing explanation on Strandline. And yes, we covered the stock not long ago. Our analysts, do like the company, and we think they have got potential. Yes, and I think they have operations in two locations. One is Western Australia, another is Tanzania. So yeah, interesting company to look at. So yes, so I think that's it, and it brings us to the end of the webinar now. But before we sign off, just to remind everyone that if you have any questions, any queries related to any stock on the ASX, feel free to contact us. We can pass on those companies to our team of analysts, and then we can obviously come back to you with our opinion, which will be, of course, general in nature. And apart from this, you can also visit our website, and our website is veye.com.au. And if you want to leave any query, any questions, you're more than welcome to go and fill your details in the contact page, and you can contact us. And there is a board line number as well. If you want to call us directly, you're more than welcome to give us a call, and we're more than happy to answer your questions. And yes, and thank you very much for tuning in once again. And apart from this, see you next time. Thank you.